Hey guys, Joe Frank here, market analyst for YouTrading. In this video, we're going to be taking a quick look at a trade idea that I'm currently monitoring. There's actually two things that I'm looking at here. It's for the S&P 500, and I'm thinking how I could potentially trade it in both directions. So let's talk about the technical outlook here. As you can see, I've drawn up these lines here, and it looks as though you could make a pretty good argument that we're actually in this upwards trend channel that's been in place since last October. Confirmation of that upwards trend channel came earlier this month when we saw that nice strong bounce twice actually, because it was at the end of February as well, from the 200 and 100 day moving averages. And yes, we've struggled to get back above the 50 and 21 day moving averages, but we're still moving to the upside for now and above this support line, which I've drawn onto the chart here. Now, if we can get back above the 50 and the 21 day moving averages, and if we can successfully get above this resistance area in the form of that double bottom from sort of like mid-February and the recent high, then technically speaking, you would be looking at a rally back potentially to the top of the trend channel, certainly towards the recent highs that we had from earlier this year in the 4,200 area. So this is going to be something I'm monitoring. It's going to depend on pretty much how US data comes out for the remainder of this month. Like obviously we've got the jobs report coming out on Friday, then we've got the inflation, the CPI inflation report coming out next week. And listen, if there's any evidence that the US economy isn't as hot as a lot of people are fearing right now, because remember, markets have been moving to price in a much more aggressive Fed tightening outlook for the remainder of this year. If the upcoming data pushes back against that narrative and says and sort of encourages markets to just even if it's only a little, just wind back a little on those Fed tightening bets, then that could be the fundamental catalyst needed for this push higher. So that's something that I'm going to be looking at. In terms of the actual trade itself, it would potentially be a break above this resistance area, and if the fundamentals are looking good, then buying the dip back to this resistance area and towards perhaps the 21 and 50-day moving averages, and then going up higher again to the 4,200 level. So that's potentially the long trade here. On the reverse hand, if upcoming data is hot and encouraging and leads to bets that the Fed's going to raise interest rates by 50 basis points later this month and ultimately a higher terminal rate, as Fed Chair Powell earlier this week warned is a possibility depending on the data. Well, if the data does come in that way, then we're looking a bit precarious here. We could break below this uptrend, and if we break below the 200 and 100-day moving averages as well, then it's looking though a break below the 2022 downtrend could be on the cards once again, which I think would open the door to a retest of the late December lows in the 3,760 area. And it'd be kind of a similar idea in terms of the actual trade. I'd be waiting for a confirmation of a break below all these levels. Then I'd be waiting for a bit of a consolidation rally. And assuming that the fundamentals are still looking ugly, you could then add to some short positions and target this low here. But yeah, S&P 500, seemingly a bit of a crossroads. I mean, you can always say that really. But those are a couple of the trade ideas that I'm monitoring at the moment. I hope you all found this video enjoyable and informative, guys, and I will see you all in the next one.